Good Fed Day, Warriors. How's everyone doing? Katie Stockton with us today. Great to hear Katie's views ahead of the Fed. So we're bringing you content to help you achieve what you want to achieve here as a trader. It's not easy, is it, guys? Hello, AJ and RC. Welcome to F.A.C.E. You're a new handle. F.A.C.E is the place to become an ace. Mike, AJ, Glenn, Kurt, how are you? Blake is here, of course. Hugo, Ryan. He's not calling us America today.
I've got to thank you, Dale. Thank
uh,
you for the face show, saving me from having to listen to Bank of England's Bailey banging on about complete rubbish,
oh,
isn't
all
it?
right. Yeah, you're not a fan.
You gave me an excuse to switch off.
I do like Bailey's in coffee, though. How about you?
Oh no, Mrs. likes Bailey's. She's already
Does
stocked
she?
up for Christmas.
All right. Well, then you're gonna make some pips today. Ingmar, Saloom, how are you? The melt up continues in equities, and I think this is going to assist it. So I was thinking, well, what Blake was saying to me yesterday about we were, talking about fading what happens on a Trump victory. And I look at the yen. I looked at the yen yesterday and I said, I have to probe it again. The dollar too, uh, in the, heat of the night before, you think it might take some time, but I just wanted to teach you one lesson right here that I think will help you the rest of your careers, and maybe you write this down. It's the three P's. Okay. So when we trade, because we see some technical contingency or something that's compelling us to risk money, we probe it. Okay. That's your first P. The trade works. You have 30, 40, 50 pips on the trade. The second P is partials. You take partials. And right after you take partials, the third P and the most important P is protect. So you probe, you take partials, and you protect. And the example was the three drive in the Dixie from a week ago up here. Okay. So you probed it. This was a signal. You had a couple opportunities to take partials, and you protected it if you took it into the election. So I was wrong about the top because you never know if you have a top until, weeks later in the rearview mirror. But even though I was wrong about a top, I made money because I probed, I took partials, and then I protected. Okay. So write them down. It only took me, I don't know, about 50 years to learn that. I hope you learn it in 5. Okay. So what we have going right here in the yen is and the dollar, especially the yen here. I also drew this line here, the double top. It never made the third drive. So right now the yen is looking like a false breakout to me, and it didn't confirm. So it's starting to work. Okay, and that's my lesson for today. Okay, and now I'm going to ask Brian. So we're getting this bounce here in euro and cable, and especially the commodity currencies. Canada was the weakest because everything else took out prior lows or highs by quite a bit. But euro washed out, took out the lows. Cable we talked about yesterday had a 3 drive for a pop. Maybe you guys took it. Anyone take the cable yesterday? I bet Blake did. And
I
Aussie,
did not.
okay, Aussie on its way to, I think this moving average. So they shook out all the dollar bears, and here we go. So I think that's what's happening here. And of course, you're going to get some type of bear market, some bounce. Silver looks pretty damaged to me. I think it's going to have a hard time closing back over 2.5. It could pop, but that's it. So Ryan, any reason for Bailey's not causing this pop in cable, is he?
No, we're seeing a dollar going a bit offered across the board at the moment. Bailey and the BOE wasn't that dovish overall, but small beans given what we're trading. We're still trading the aftermath of the election, but no, dollars getting a little bit of a whack at the moment.
Yeah,
Euro dollars up, cables up, Aussie dollars up, dollar CAD's down. So yeah, I think we're just still. I said it this morning, looking at markets this morning, it doesn't feel like the market knows what to do next with all this stuff.
yeah,
It's got the election, it traded into the election, it traded after the election, and now it's like, well, shit, what do we do now? And
yeah,
so I'm just going to, watch, see what levels show up. Gold's having a little bit of a move back above 26.70. That might be significant.
yeah.
Dollar MEX is getting pasted at the moment. So it looks like I won't be lasting long with that long.
So the election trades are unwinding,
Yeah,
except for risk. Okay,
yeah, pretty
so
much.
risk is the only one. Look, nat gas is still trying, guys. But okay, so the S&Ps, I can't buy them, I can't sell them after a rally like this for trades. Um, look what the Russell gapped,
Yeah,
it's up huge. Um, so we're in the melt up.
potentially. Yeah, I mean, I said, I wouldn't be surprised if we saw 6K in S&P by the end of the week. And then that looked a bit wobbly in the move yesterday, but look how it came
Yeah,
screaming back. It was a rocket yesterday afternoon, yesterday evening. So yeah,
yeah,
there's a lot of stuff still to sort out, but S&P's, it's got back to what it was doing before the election, and potentially gold might be doing the same thing as well. So yeah, I'm
yeah.
keeping an eye on that. I might have a little nibble in gold.
Yeah,
It's
Saluma's
healthy.
making a great point. Okay, we have a very, um, you know, smart audience of some, good traders, and he's making the point that Nasdaq finally is going to take out this high. I was looking for 22,000, and 6,000. We're almost there. 6,100. We're still diverging on the weekly. Is this the weekly? Yeah, yeah. So, but I can't get in front of it yet. Maybe next week. And the weaker dollar should just be jet fuel. What do you think the Fed, a quarter today, Ryan?
Yep, a quarter, and try and get through this press conference without too many political questions. Keep the narrative going. The only thing he may touch upon is obviously this rally we've seen in yields.
Yeah,
Is potentially tightening up financial conditions. He won't want to let that go too far because it goes against what they're doing in cutting rates. So he might offer a bit of a pushback against
yeah,
that. Just telling the
I,
market, don't get too far in tightening artificially.
yeah, and I think the market's going to listen to him. So I mean that's part of the yen trade, right? I mean, charts look pretty similar to me
Yeah,
between yields and yen. So
yeah. There was a
y-
little bit of a breakdown yesterday. Just intraday, bit of a breakdown in the correlation, but
yeah,
we look to be back on it now. And there's been a big drop in volatility in dollar yen as well. We were trading on the 1 months at 13% for the last few weeks. Hence why you get a 50 to 100 pip move on every headline and data point. But now we're
yeah,
down to 10.5%. So vol is coming out of that. So things should calm down a little bit for dollar yen, it might mean you can actually trust some technical levels now and again.
Yeah, and it's taking out one of them. So there you go. So it didn't turn out to be Wile E. Coyote from here, but so Wiley did a little rock climbing to a higher level, so he'll have a bigger fall from up here than he would have from the ledge here. So, the Roadrunner is chasing him right now, and the ledge is starting to break. So, you never knew Forex trading is a metaphor, is a cartoon, the Roadrunner. All right. We're chasing or we're getting chased. And it's time to bring in the boss. Not Springsteen.
I'm here.
Morrow. Oh, you. Oh, the boss. You. All right. All right, boss. So, what do you think? Am I all wet about the yen and the dollar and the reaction in FX today?
We're seeing a
Are,
little bit of a pullback of the moves we saw yesterday. Do I see enough to say that, okay, that's it?
okay.
We got to buy the rumor, sell the news now, and everything is going to unwind. I think it's extremely premature.
Okay. What
To
would you need in, say, for example, the Dixie to have confirmation? Do you have to wait until we take out this low, or are you going to have a tell before that?
We are now back testing the first area of support, which were the previous highs of that
Private.
consolidation. Yes, exactly
That's
where you're pointing.
very important, people. There's Steve's making a point. I was going to talk about it. Thanks for reminding me. Always pay attention to prior highs, prior lows when a
Yes,
market's reacting, right? So if
yes,
it
because
doesn't, go ahead, boss.
prior
Go ahead, bro.
price action, in essence, also gives us demand and supply zones, right?
Right. Yeah.
Which traders frequently use as areas to place limit orders,
Yeah.
stops, etc. So that's important. So we're now testing the first important area of support, the
Okay.
104.60. So definitely, this is the first area to watch. If this holds, there is
Yeah.
absolutely no discussion to have from a technical standpoint about a reversal lower or whatever else, right?
Okay. Yen is below the previous double top peaks. So is that
Yes,
giving
but
you a
remains
warning?
within an ascending channel.
Oh,
I'm paying close attention to an ascending channel that has
from
defined
back
the.
here?
Yes, exactly.
All right. I'm
Um,
a mind reader.
yeah, of course you are, and a very experienced one. Um, so I'm paying close attention to that. Keep in mind, I don't consider it a coincidence. I blogged about it earlier today in the chart of the day. Gold
Yeah.
also stalled at the ascending channel trend line support that has defined the last leg of the move higher, roughly at 26.42.
Okay.
So, as I said, it's a little bit premature to say that everything is unwinding. And most importantly, we also see that risk assets haven't even really pulled back, right? If we look at
Yeah.
the S&P, the Nasdaq, etc., they're at the highs more or less that we had yesterday.
Look what
Minus.
gold tagged, Steve.
Yes, it's the 50 DMA as well. It's a triple.
Yeah.
Actually, it's a triple confluence
And
of
when
support.
Steve, yeah, and when Steve was talking about supply demand zones, online trading academy would charge you about $5,000 to learn what you just got for free. All right. Anyway,
Um, so I think it's a little bit premature. What I wanted to emphasize, I said it yesterday, and I heard Ryan mention it as well. I think what we should be paying close attention to is if the Fed is going to actively comment on the recent rebound we had in yields, because this is going to be something that, if not addressed upon soon, can actually seriously start affecting risk appetite.
yeah.
And I don't know if the Fed is going to decide to mention something or do something about it today. Perhaps they might choose not to just the day after the elections. I'm not sure about that, but I'm pretty sure that it's a matter of time before they really have to address it.
Okay. All right. Have you ever seen that?
Otherwise rate cuts, you know, have no real effect.
Yeah,
Right?
because the long end is under pressure. The more they ease, the more the long end is under pressure. So what do we have? A steepening of the yield curve as they ease, right?
Yep.
Well, and the
Okay,
question
and
is,
that's
Steve,
go ahead.
I was going to ask, the question is, how does the Fed address it? You can say they're going to address it. How do they, in your mind, how would they do that?
They have three methods. The first, which is the softest, is saying that they're closely monitoring, which is the free thing to do. They're closely monitoring and they will address it as necessary in the near future. So the first and simplest and, completely inexpensive solution is to say that they're paying close attention and they might have to act upon it soon, which might on its own force the markets to readjust, right? The second solution is cut or point to faster cutting of rates, which should also spill over to market expectations and hence trading upon yields. And the third solution is changing the pace at which they unwind quantitative tightening, and that will also change expectations perhaps about how fast we can even shift from quantitative tightening, because the balance sheet is still shrinking, right? It's nowhere near the pre-COVID levels, but it's still shrinking. It has shrunk from 9 trillion to, I have to check it, something like 7 trillion, something like that. I remind you that before we started quantitative easing for COVID, the balance sheet was roughly at 3.7. So we're still almost double that, right? So they've slowed down the pace at which they do quantitative easing. They might point to slowing it further or even stopping it. And then the market is going to start thinking that, what's the next step if they actually stop quantitative tightening? Is that they're going to go back to quantitative easing. So these are the methods they have in hand.
Okay, but that would obviously it would allow yields to come down a little bit, but stocks would probably rally as a result.
Yes, obviously.
Yeah.
But one of the two has to give. Either yields will have to turn lower, or risk assets will have to turn lower eventually.
Well,
you know what it reminds me of, Steve? 87, we had the most extreme case of disintermediation with the bonds falling and rates spiking, and the market kept going up, so that it kept diverging from bonds until it finally snapped.
Yeah, this can actually indeed happen, but as you very well said, Dale, not for an extended period of time.
Right.
Not unless the economy is really, really healthy. And let's be honest, the US economy is not healthy, and the vast majority of economies are not healthy, right?
Yes, the whole
economies
globe.
that are so indebted,
yeah,
cannot be considered healthy, because
we have no one to help pull us out of it like China did in 2009 when they were still an engine of growth. Where's the engine of growth in the world now?
China has its own huge issues, obviously.
That's what I mean.
Yeah, the only difference with China is that in the case of China, nobody knows exactly how bad things are, because China is a big black box, right?
Yeah. Yeah.
They're bad for sure. Now, how bad they are, I'm assuming very bad.
Okay. All right. So Blake, you want to take over the screen and show us what you're, how you're playing the Fed, what you're looking to do, how you're going to react to the reaction.
Well, okay. Did you stop sharing so people could see my screen? Not sure if you did that. Can everybody see my screen?
Yeah.
Okay. Okay, cool. Well, what we're seeing right now is we're seeing an unwind of all the Trump trades, minus stocks. I mean, obviously the stock market has rallied quite sharply. Going into the election, and now here we are, futures, we just had S&P hit new highs. But what we're seeing in the FX market is we're seeing an unwind of a lot of this stuff. So you got the euro, back around 108. And like I said, I even said it last night on the trade-off show. I'm like, we could rally back to 108. This is enough, in my opinion, to like squeeze the market, getting everybody that was like, oh shoot, I was long, election night, getting them squeezed out, shaking the trees a little bit, because that's what the market does. The market, grabs you by the ankles, turns you upside down, shakes you around a little bit, and tries to get all the change out. So that's what's happening here. You got the euro squeezing past some levels that we were at election night. And I think this 108, level is going to be pretty big. And we're going to take a look at the dollar index here in a little bit. Sterling is squeezing. Has Bailey said anything to cause this, or is this just on the heels of more dollar move at this point, Ryan?
Yeah, just a dollar.
Okay. All right. So it's overall dollar move, because I haven't listened to listening to you guys, listening to Bailey in the chat room. I definitely don't want to go watch them. So that's that's my avoidance there. Here is
I take the pain away from you, mate.
Thank you. Yes, and that's exactly what I was thinking. Is I hear all these guys in our chat room. You should hear. This is funny. You look at these guys beating up on Bailey over here. All their conversations that's going on about what Bailey's saying. I'm just like, I don't even want to be there. So I'm not even. That's in the ForexAnalytix chat room. If you guys want to know what I was just showing. Anyway, you see the Aussie squeezing, and the Aussie, Dale, you said it earlier, and I agree with you. We could probably squeeze a little bit further. You look at the 38% retracement, it comes in at 66.75. It's also the 127% extension of the I didn't want to do that, the election night move. So why can't we go back to 66.80? I mean, we got really close, and what could happen today, and I'm not saying it will, what could happen is we could end up, putting in a little false breakout, squeezing everybody. That's what the market does, right? It's just, it's squeezing the market, and maybe that move was enough. Well, I don't know. I think technically we can still go higher, but it showed its hand last night. If you guys didn't see that, once we broke through this resistance last night, it showed its hand of what it was going to do. And so Aussie is squeezed, and we tweeted about it last night on the ForexAnalytix Twitter handle. You got the Kiwi right up against resistance. You got the dollar CAD that's pulled back a little bit. I have to say something about the dollar CAD. First of all, we have Canadian jobs report tomorrow. Everybody knows the big resistance at 139.50 to 140, and then above there's Cillian. I've said this for a long time, Dale. We've talked extensively about this for the last 6 months. I expect the dollar CAD to trade to 140, and we are pretty much there. And I think and I wasn't long up here, but now that we shook out all those the institutional longs or short Canadian traders, after we stopped them out, now it opens the door, and I do think the dollar CAD could continue to rally. But you guys know, as Ryan mentioned on the flow show today, these are your levels, 139.50. We break above that, that's what really turns on the heat. And but we're not seeing that yet. I mean, we're seeing pullbacks, but I have to say this about the dollar CAD. You can see this move here. We've only retraced to a 24% retracement of this entire move. That is a very shallow retracement thus far. And so you got to think about that. That's that entire move right now. We've only pulled back to 24%. In the event we break out, this is an example of the market just not giving any traders an opportunity to get out. I'm going to show you this statistic right here. And you can find it on here. This is like my FX book, just to show you guys. Look at all the positions they have in the market right here. Out of all these, different positions, let's see, volume, it shows you the volume. There's 92% of the market is short dollar CAD. You can see why. This is retail, obviously. You can see why the market is so hesitant about going down, because you've got every retail trader trying to short this thing at these highs. So what that does is that opens up some upside, especially if we have a weak Canadian jobs report tomorrow. We are expecting a higher unemployment rate. We are expecting I think Canada is going to create, like, I think market's looking for about 28,000 jobs. I have to go back and, well, we can look at it right here. You go to Friday here. Market's looking for 33,000 jobs and unemployment to tick up to 6.6%. Well, let's say Canada loses jobs. It's entirely possible. And if that happens, you're going to have that dollar CAD, probing that resistance, if not breaking out. Again, pullbacks are very, very shallow here. The dollar Mexican peso. This is perfect example of a Trump trade gone wild. And look, I believed that the dollar Mexican peso was going to go a lot higher. I thought we were going to go to 21. And I'm not saying that we're not going to go there. I thought that we'd reach there on election night, even though I got out of my longs at 2072, I think, if you go back to the trades room and ForexAnalytix, that I got out of my longs down up there. But you can see how we've unwound all this, because so many people have gone into this election and, expecting the dollar Mexican peso to really, really break out to the upside. And it's been a failure thus far. So we are seeing that unwind, but we're not seeing it in equities yet. And that's the point I want to make, is that the equity markets are still very, very strong at this point. And I'm not really sure what is going to, reverse that at this point. And Steve, you mentioned, is it higher yields? Maybe. I mean, I guess. We have weekly unemployment claims today. Is that gonna really move the needle? I don't know. But if you look at yields here, this is the 10-year, and I'm just gonna show you guys technically. It's not that we're in uncharted territory in yields, but if the 10-year starts to get up at 450, maybe 475, following the Fed today, does that rattle the market a little bit? I don't know. I mean, like I said, we're not in uncharted territory. We're just up there this last year. But it's definitely going to be a drag on the economy. And I'm going to stop really quick. And since we do have the Fed, and I'll get ready for the weekly unemployment claims, let me ask you this, Steve. How, and Ryan, you can answer this too, how unlikely, the Fed's expected to cut rates by a quarter today, quarter point, 25 basis points. Is there a world where the Fed surprises the market and leaves rates unchanged? What do you think, Steve?
No, there isn't.
Okay.
Especially because of the recent move in yields. I mean, if you ask me, is there a chance of some kind of a surprise? There is a small one. But if there is a chance of a surprise due to the recent move in yields, is in the other direction, to give us more, not less.
Well, you got to imagine, and I was reading the Bloomberg article just yesterday about Powell and how he has to face Trump, and could he do something just to spite him? I'm just wondering. Let me pull up the data here. And then here comes the jobless claims. We have just a few seconds. We have about 30 seconds. Ryan, what do you think? What do you think the Fed's going to do today? How can they surprise the market?
I'm with Steve. They don't want to do any surprises.
By doing the right thing. That would be
doing the right thing. When did the Fed do the right thing to do? Well,
that's why it would be a surprise.
It would be. Dale, you are a little muffled. I know you got Katie. She's coming here in just a second if she's not here already. So we got about 10 secomes to the jobless claims.
Can you hear me now?
Yes, you sound like you're
Scuba.
swimming in your goldfish bowl. All
Time for
right,
your joke, Blake. Scuba Steve.
Scuba Steve. All right. Jobless claims should be coming out. Am I missing them? Oh, there they are. Inline.
Move
In
along.
line.
221. Nothing.
Yeah,
No change.
non-event.
Non-event. All right.
Non-event.
And you know that squeeze that we saw in the dollar, the reversal. I don't know if that's really gonna. I don't know if that's gonna stop today. You got the euro. Looks like you can trade it towards 108, if not a little higher. Yields coming down just a bit. S&P is just trucking higher. Everybody believes that this Trump trade is higher with equities. It's going to be interesting to get a technical view from Katie and see how she feels about this equity market rally that we're seeing right now. And one of the other trades while Dale's finding Katie, and Dale, do you see her here?
No, no. I like so Ben's agreeing with Steve if you read Ben Maldonado's comment.
What did he say?
Well, he's saying strong dollar and weak bonds are tightening financial conditions. This will hit risk equities at some point.
Yeah, at some point. Yeah, at some
Yeah.
point. Yeah,
Yeah.
I mean, we'll
Please
see.
tell us the day, W.D. Gann.
Yeah, there we go. And I know, Steve, you said it a little bit earlier, and Steve said, I think it's a little bit too early for buy the rumor, sell the news. But again, I'm gonna
Well, I'm not
go
saying
back
it's unlikely, huh? I mean,
No,
it is, but we don't have enough evidence yet, technically. I mean,
technically we do not. But this is one of the things that, I'd mentioned for the last several weeks. After the election, you got so many people that are long equities. And okay, I'll give you an example.
Yeah.
Even my teenage son was trying to buy defense ETFs in his Robinhood account ahead of the election. I mean, that's what,
why did he think that Kamala would?
No, he thought Trump would win. And
I'm saying that because
it could play either way. It could play either way. And both ETFs rallied about 6%. So here's the thing is everybody is long, and everybody's long crypto, everybody's long equities, everybody's long the dollar. And now that we've gotten past the election, I know we're still waiting for what's going to happen with the House. But it looks like that it's going to be a full on red sweep.
Wow.
Where do who's left? And that's why I've said over the last couple of weeks, we might need a day or two after, or maybe even a week after the election, but we are starting to see an unwind in a lot of these positions. Here's a great one. Here's the dollar Norwegian krona. Now I know we had the Norges Central Bank today,
false breakout.
But we have a false breakout, and yeah, we're breaking through support right now.
Katie's here.
We're on support. So anyway, I know Katie's here, so glad she's here because I can't wait to hear her technical viewpoint of the market. So one of my favorite technicians around. So Ryan, Steve, thank you guys for being here, and thank you for providing your input ahead of the Fed. And good luck today with the Fed, guys. And we'll see all of you that are in the ForexAnalytix community. We're going to see you on the Morning Edge in about 45 minutes. Steve and I will, and we'll catch you there. All right. Thanks, Dale.
Thank you, Dream Team. Ryan, Steve. Good to have you around, Steve.
Thank you, mate.
Blake,
nice to be.
Thank you. And Katie, welcome back. Great time to have you.
Good to be with you guys. A lot going on, right?
Yeah, market. Yeah, market history. Major moves. What's top of mind for you post-election and pre-Fed?
Well, I will say that, we always hear about selling climaxes, but what we don't hear as much about are buying climaxes. So that's what I think we really need to think about after seeing yesterday's reaction. The market or the equity market was definitely teed up for a rally around the election. We had a short-term oversold reading for the S&P 500, and the VIX was a little bit overbought. So here we have it, and we're a little bit suspect on its sustainability. So now what we're going to do going forward is basically watch the gap. So,
Okay,
so
can you share your screen? And I remember many moons ago, Katie, that there was a measured move off the breakout at 4,800 that targeted 6,100. If we
right,
just
yeah,
took that range.
that's
And
right. That did. And listen, like we're not terribly far from that. A more
right,
recent breakout targeted, and this was more of a short to intermediate term objective, was about 59.35. And certainly now with that sort of in
yeah,
line, we do feel like we're a little bit skeptical as to how this will unfold. We're not seeing it as a big breakout unless, like, if you look at the Russell 2000, it does look like a breakout. So we'll look at that chart too. But this is the
okay,
S&P 500 index on a daily cloud chart, and you can see the gap.
yeah,
So we're watching now going forward the bottom, or I guess really top of the gap, and that's roughly 58.65 for the S&P 500 cash index. So as a very easy thing for folks to watch at home in the next few days, if we do see the S&P come into that gap, that usually is a setback. It usually means that we will see that gap very quickly filled because there's a
yes,
sort of a lack of supply in that gap. And if that happens, we'll likely see downturns in our short-term metrics and things will start to look pretty tenuous. We have presently a neutral short-term bias, but if we did see these downturns unfold, which we suspect may happen, we would be pretty quick to position for a significant pullback. If you see the
how's
DeMark indicators, yeah, you see there's a
yeah,
12. For those of you that know the DeMark indicators, we could see a DeMark 13 today for the daily S&P 500 chart. And that's something that usually would support 2 weeks of consolidation at a minimum.
okay. So interesting. What do you think that the catalyst for risk appetite, like we've been talking about here, Katie, is that even if yields pull back a little bit, that yields are heading higher, and that's something that no one was planning on, including Powell?
It's really interesting. I know, of course, we have a Fed meeting today. It feels like we're getting sort of piled upon in terms of
Yes. Yeah.
events and market moving news, right? So we have, I don't know if it's an out of consensus view on yields, but what I will say is in regards to the correlations right now, they're
Yeah.
all out of whack. Right. We've had such huge swings. This is the 10-year Treasury yield on a daily bar chart. These big swings, it takes a long time for these moves and yields to really catch up with market fundamentals and macro takeaways, right? So because it's been so almost directionless from a longer term perspective, you can see that in the flattish
Yeah.
200-day moving average. I think folks don't really know what to make of that. They don't know if the rising yields should be positive or negative right now. And, certainly that could apply to the banks in particular, which had a massive move yesterday.
Yeah.
So we're seeing sort of a disjointed correlations between yields and equities. And so we're not going to rely on those. Rather, we'll just kind of look at yields independently and make a conclusion. And, that can
You think
obviously
we're
be
going to pull
interpreted
back
different
down
ways.
to the cloud?
I do. Yeah. And that's why I
Okay.
brought up this chart because
Right.
here
Okay.
too, the DeMark indicators are really, really kind of loud and clear. You have, as of yesterday, with this big up move, one of these counter trend indications. This was the last counter trend indication, which was quite timely.
Right.
And so was this one. So we feel like we have this, explosive rally in yields, which in and of itself is more likely a counter trend move. When you get that kind of sharp up move, that's more likely counter trend with the DeMark indication that it's now overdone after yesterday. So we think it'll come back in there. You could argue there's maybe some support at the 200-day. That's at 419. But we
Okay.
think there will be a bigger retracement, bringing yields back below 4% into this cloud-based support. Now, though, we originally were calling for the low threes, and it's looking increasingly less likely. And maybe we'll see a higher low relative to September, which was around 3.6.
Okay, so it looks fairly analogous to the dollar.
Hmm.
Because the dollar, I think that we're going to get a pullback after the spike that we had to clean out all the bears um, with yields. And yields, if there's one tight correlation, Katie, it's been US dollar yen with the 10-year.
Oh
The
yeah, yeah.
charts are almost identical. So um, yeah, I'm with you on that.
Hmm.
Do you think
Hmm.
that might be the period where yields come down, where S&Ps begin to correct?
I think so. We are looking for a correction to unfold before year end.
Okay.
And with that in mind, of course, we would be looking for better selling opportunities in equities. With that,
Okay.
we do think we'll see yields and the dollar come off. The signal here on the dollar index at same 13, it
Yeah.
was registered a couple weeks ago, and it still gives you kind of that sense, right, that it's overdone in the same way that this
Right.
was overdone on the downside, and this here too overdone on the upside and back here as well. So you can see how timely these metrics have been.
Yes.
And that gives us some conviction in the directional bias there. The
Two
euro
and a half.
likes to
Two.
strengthen.
Yeah. Right around 102.5, you have your moving confluence with the moving average in the cloud. That would
That's
make
exactly
sense.
right. Yeah, that's right. So there's the 50-day moving average in the cloud, which you can see rising into year end. So perhaps it's not that dramatic as a retracement, but it does look like a retracement is likely. And I'd keep in mind that for yields, the reason we don't think it's done yet, yields in the dollar, this is the monthly chart. So this is our framework, right? Look at this monthly MACD. It's still pretty decisively negative or deteriorating.
Yeah.
So we don't think that there's going to be any kind of immediate and prolonged, sort of resumption of this secular uptrend back here.
Okay. All right. So, when I feel the same way, like you revise your yield narrative, the
Hmm.
persistence of, I was dollar bearish, but it was so persistent, this rally in the dollar, that if we do get a pullback, I think you have to buy it, and maybe the Dixie has 109 in it. Could you
Yeah,
make
and
a case for that?
well, we did see with the relief rally, right, the explosive relief rally, we've seen the monthly stochastics turn up. So that would suggest that indeed, yes, we could see a higher low and
Yeah,
that the September low will prove to have more importance than we initially thought. So we're aligned
right.
with you, it sounds like.
Okay.
This is
You
pretty
made a
interesting. Yeah.
yeah,
This is
you made a great call, Katie, on gold silver ratio about a month before we had one day where the gold silver ratio completely collapsed. I remember because
yeah,
I was on the other side of it. I was looking for a breakout to the upside and a move to 93. Um, we've retraced almost that whole move on the gold silver ratio.
that's
Um,
true. Yeah.
so what are you still in favor of it? This might be
So,
a good
you know,
time to put it on.
I think almost like silver is to gold as ether is to Bitcoin.
Yeah, yeah,
It's like a, sort of like, just a higher beta version of the same. So when they're working, I feel like we see outperformance from silver, but when you're seeing
right.
the pullback, you do tend to see underperformance. So I think with a consolidation phase still likely, we have been calling for consolidation in both in absolute terms. And we have indications that that consolidation could last more than a few weeks. This is silver on the weekly bar chart. You see a
Yeah,
demarket issue there. So that would
right.
suggest we have maybe another, I don't know, 8 weeks of consolidation in store. We're still very comfortable having exposure to silver and gold throughout
Okay.
consolidation, but they've had such good runs. And during that period, yes, you might see gold do a bit better just because I think it's seen as the safer haven, much like
Yeah,
Bitcoin would be versus Ether.
right.
And this is the long term, the monthly chart of silver. Look at this momentum here. So this is
Yeah.
why we are comfortable holding on to a long term position. It
Okay.
looks even more compelling to me than some of the equity indices out there.
Okay. Where's your red moving average coming in on
So
that last chart.
this is the stochastic oscillator, and this is the MACD.
Right.
This moving average is simply the 12-month moving average. So
Where's
it's
it
really
come
just,
in?
yeah, it's not, oh, where is that? We're not usually using it as a support level.
That's my target at
Yeah,
28.
2787. But I love how it
Okay.
just gives you like a good sense of the prevailing trend, because the
Yeah.
cloud model you see on the monthly is often a bit too far to be super helpful.
Okay. Energy. Why don't we talk about energy? I know that you're constructive on natural gas. Is that correct?
Mhm. Yeah,
Okay.
so as a counter trend, listen, with any kind of counter trend positions, you're holding more risk, right?
Yeah.
We have been, I guess I'd say, underweight the energy sector. So looking at the equities, this is the energy index versus the S&P 500, and you can see why we've been more comfortable being underweight. So in relative terms, it still is not an attractive sector. But there are signs of life. I mean, if you look at this benchmark here in particular, look at this support. This is the weekly cloud-based support,
Yeah.
seems to be holding. So I think you take the energy stocks really kind of individually and evaluate them and just make sure that they're managing to hold support and that you can make a strong fundamental case for them. For crude oil, it's been such an exercise in frustration, and usually when
Yeah.
that's the case, it's a trading range, right?
Yeah.
So we are kind of honoring the trading range for now, but it has a lower bias, and I'll pull up that chart too. But it does have lower highs in place with sort of weakened long-term momentum. So we're not very constructive on crude oil as another
Okay.
sort of indication to be underexposed to the energy complex. But this nat gas is very interesting. It's hard to find an equity that looks like this, but you can see almost like the longer term turnaround. And we love the cloud model to this end, where sometimes you'll see a breakout like here that isn't quite decisive based on where there was a sort of a standard resistance zone. So the cloud is telling us that it's already reverse coursed. I like that we see the cloud-based support hold and these corresponding upturns. So we're pretty encouraged by natural gas. It's not for the faint of heart, of course, because it's still kind of technically more of a turnaround, right? You see the monthly MACD having really turned the corner. If you keep this monthly MACD in mind and we pull up crude oil, and you'll see the difference. And of course, most of the equities are more closely tied to crude oil than natural gas. So
Yeah, it's hard to find pure plays in natural gas, isn't it?
it really
Besides
is.
natural gas.
Yeah.
Yeah.
And we
There are royalties like there are in metals that they pay you to own them. There's a yield on them.
Yeah, it's
And
interesting.
yeah, royalties. A lot of people did pretty well with precious metal royalty companies where they didn't have the operation risk, or a lot of them have no debt because that's what they are as a royalty. It's just, I've been hunting, you could tell. So
Yeah, it's really interesting. If you find any good ones, let me know because
okay,
it's hard to
Katie.
find. I usually just tell our clients to invest in UNG or something like
Oh,
that. But
yeah.
I know full well that that's not necessarily an ideal way to go about it. And you obviously have fees embedded there. This is
How,
crude oil on the monthly
okay.
chart. This is
Yeah.
you see the MACD looking really quite different.
Yeah.
And more range bound overall, but with lower highs,
Yeah.
somewhat oversold. But this long-term support, it's like sort of the low to mid 80s. It is pretty meaningful as support. So perhaps that keeps a bit of a floor under crude oil.
Yeah. I think it wants 62, but just a guess. Anything else that you're paying attention to that I, may have missed? And an appearance on CNBC that you gave another great call to.
Oh, well, thanks. So I'm watching the VIX. This is pretty interesting. Yesterday, look at this is the daily chart of the VIX. This is another thing that we want to keep an eye on. We've believed that it's moved into this higher volatility cycle. And look at this move off of a 9 sell right back into the 200-day. So this is a real sort of pivotal place, I think, for the VIX and potentially for the market if it does indeed discover support again, like it has done during this higher volatility cycle. Then we probably have some real volatility in store, even in the next 2 to 3 weeks. So this is something we'll be watching. Also, keeping an eye on this gap, which is at 1682 for the VIX. So that'll be something that we're watching. And I can't not mention Bitcoin because
Oh, yes.
that was quite a move yesterday. And you see
Yes.
Coinbase here up 31% yesterday, which is just wild.
Yeah.
That strikes of being overdone. But even still, this is potentially a real breakout for the price of Bitcoin. So we've been watching this pretty closely. And, we always love to have that confirmation 2 decisive weeks above a downtrend line or some resistance. And that has the potential to happen this Sunday when Bitcoin rolls to the new week. So we'll be watching that really closely. If it retraces a good deal and comes back below, it will fail to do that. And that would be obviously informational. But it's looking good for a breakout. And I think it's going to be meaningful because if it had already cleared these highs back from 2021. So there's no resistance to hold back Bitcoin at current levels. So assuming that it can confirm this breakout, it doesn't share in any of these longer term DeMark issues that some equity benchmarks do. If you look, this is the monthly. You can see that the DeMark indicators are fine right now.
Yeah.
So I think it's compelling. And
100,000, 120 is actually what that formation measures. It was kind of like a big bull flag
yeah, almost,
breakout,
yeah,
right?
or like a cup and handle. You could see
Yeah.
that here.
Yeah.
So
Yeah.
it's a pretty classic technical setup. The breakout just needs to confirm in our work, and then I think we'll get more constructive on it. We've been more like neutral to negative kind of throughout this downtrend channel.
Well, if you don't learn how to change your mind, you won't have any change left.
It's a good way to put it.
I know I've experienced it. So anyway, stubborn Dale. So is Coinbase your proxy for how you trade Bitcoin?
No, I really use Bitcoin itself when I'm
Okay.
evaluating them. And now we have all these great ETFs to
Yeah.
use, but I always pay attention when you see such a massive up move. Arguably, you could say, well, Coinbase should be extended, but when you frame the 31% move, note it has a 13. It actually doesn't look too crazy. I mean, we were there back in July, so it's just a super high beta name. But so we like to look at a collection of things as not to get too hyper focused on just one security.
Okay, well, we're heading into the end of the year. How has your ETF performed compared to the market?
It's been great. So in Q3, this is the TAC ETF. It was the #1 performer in its category, which is the Morningstar US.
Congratulations.
Yeah, thank you. We're thrilled about that.
That's
It's
great.
the Morningstar US Tactical Allocation category, which is actually pretty mishmash in its construction, but even still, we're glad to it be shining in that type of environment, beat the S&P 500. Of course, beat our benchmark with that in mind as well, which is the Morningstar Moderate Target Risk Index. It's basically an alternative to a 60-40 type of portfolio. And that indeed is almost what TAC looks like over the history of its model is something like a 65-35 type of portfolio, but there's that gold component in there that's a differentiator. And the gold
that
component,
helped.
yeah, it really helped, especially in 2022. It helped give us some nice outperformance then. So steady as she goes. The goal with TAC is not just to obviously participate on the upside; it's to really protect on the downside and to have a lower correlation and lower beta, which advisors seem to welcome.
And the symbol on that again is TAC,
So
T-A-C-K, right?
TACK, and it's the Fairlead Tactical Sector ETF.
All right. Katie, always a pleasure and very edifying to talk to you every time we get together.
Yeah,
And
same here, Dale.
all right. Well, Katie Stockton, everyone, follow her on X. You have to. That's Stockton Katie. You'll see her on CNBC. I think you're the best analyst that they have on, and
Thank you so much, Dale. That means a lot.
my volume always goes up dramatically
That's
when
good
you're
to
on
hear.
there. All right, so
Take
thank you so
care.
much, Katie. I'll
You're
talk to you
welcome.
next year.
Yep, sounds like a plan.
All
Take
right,
care. Good luck.
Katie Stockton, everyone. Take it easy, Katie, and you can
You too.
join. All right, and you can join Blake and the team in 20 minutes on the Morning Edge. I told you that Katie would clarify everything. So a lot of gaps she talked about. Tell me that content's not going to help you going forward into the Fed and over the next week or so. So that's what F.A.C.E is. You know what it stands for. ForexAnalytix Community Experience. Who had a good experience today being in F.A.C.E? Give me a why. Did you, Sinatra? Who? Only one? Everyone did? All right. Who had a good experience that's hasn't even tried a trial yet? Because that's what you have to do. Because election night was crazy in the room, and a lot of guys were short euro on the election. And that's a wrap for me. Don't just count your pips, count your blessings. And we'll wrap it up tomorrow. TGIF tomorrow, everyone. I'm ready. All right. Adios.